Market observations for Bundaberg, Queensland. Thank you for joining us once again. We've been getting many comments on our YouTube channel, area requests, so please, if there's any areas you'd like us to take a deeper dive, uncovering the research for your own property investment goals or journey, then put it into the comment section below. We'll make a best effort to take a deeper dive like this for you under our market observations section. And we did have a comment throughout the week where someone said these are great, can you do one every day? There is a lot of work that goes in behind the scenes to put these together, probably 10 or more hours. I've got Chris standing behind me over here on the camera. He does an amazing job in putting together or editing these. We've got Eric, our actuary data scientist internally, leading our research department, getting the data organised, and then obviously filming and preparing this for you. So we love doing it. We've been told it provides a lot of value to the community, and your encouragement is really heartfelt and appreciated, so thank you. But just letting you know, there is a little bit of work that goes in behind the scenes, so we are aiming to do one of these a week at the moment, if that's okay. Please, if you do like the content, it would be wonderful if you could share it with your friends. You know, post it on a forum if someone's having a chat about Bundaberg and it might be of interest, and then like the video. That would be much appreciated. That does show us that we're doing something right and we can learn, we can test and measure and improve. So like, if you feel the need, subscribe to our channel down below as well, and click the bell icon so you are notified the first moment that we do post future videos. So you'll be on the inside scoop. So thank you for that introduction and being your patience. Let's jump now into market observations for Bundaberg in Queensland. You've been following the channel for a little while. You do understand how we put this together. Property investment is a science. I've been investing for almost 20 years. I've got a software engineering and a research background. I see how this all pins together. You're very well advanced in equities markets. You have fundamental analysis and technical analysis. We take the same approach with property investment. We have fundamental analysis, the macro, and this is around demand and supply, and then we get into technical analysis. So stick around until the end of this video today, because we're going to be really breaking the mold. We're coming to a conclusion here in this video, and then we're throwing it on its head. And it's really going to change the way that you need to look and understand these markets to invest in, because sometimes the fundamental story might be incongruent with the technical analysis, the quant versus qual conversation. So at a high level, property investment is a science. We need to reiterate that and remember it. So firstly, we're going to assess the overall market opportunity. We want to understand the quantum of the opportunity and then determine, is it the right time to buy in that area? Okay. We want to look firstly at employment. That's our first area of study. Once again, nice, diversified employment. The strongest employer, healthcare and social assistance. I love that when it's a regional centre. Okay, when the primary employers are in health, it means that it is a focus of the city and it draws in surrounding areas to that. It is a local hub. Others like Wagga Wagga, Bendigo, even like Toowoomba, you have areas that are in the eastern coastline that suck in the surrounding couple of 100 kilometres. This is a health and social services hub for the region. It's great when you see it as a primary employer for these regional centres. You've obviously got retail, agriculture is a big one, accommodation, sort of tourism would be sort of retail and accommodation and food services, that would flow in there. Obviously the northern part of Queensland, mid to north area of Queensland is very focused towards tourism. But it is nice and diverse. 15% in the primary employment category does mean that there's not much else to go around, so it is nice and diversified in terms of the industries people are employed in. A good win, a good positive sign. This not so much. So let's look at the timeline down here below. We've had longer term unemployment at around 7%. Okay, that is high on a national level. We did see it dip here through or into the beginning of COVID, but we have seen it pop up over 10% during COVID in the last little while. That is a very high unemployment figure. It would suggest that there is a reliance on tourism and hospitality, and that may be have been impacted in COVID. So this is a detraction from the area. We need to be really comfortable that this pipeline of employment is going to recover right now and in the future. And it's probably a large dependence on international tourism coming into this area. Hervey Bay is just into the south. Remember though, if we just skip back, we do have agriculture as a primary employer, we do have a lot of mining and agriculture in the region. So there is a backbone to this outside of tourism. So it is something to watch, but not a no at this point. New projects on the horizon. Is the employment landscape likely to change? I'm not interested in construction employment. I'm interested in ongoing employment that impacts property. Okay, those big ticket items that support property, not necessarily transport. That might support, transport into Queensland, north and south, but not necessarily the area overall. We have a solar project up south, $350 million solar project. That's good. Agriculture employment, energy employment, it benefits. Department of Transport and Roads, this bypass type infrastructure spend, this is ongoing improvements. We have seen this type of project have little impact on property prices going forth. So even it is a big ticket item, $1/3 billion there, not necessarily earmarked for major impact on property prices. We have a big jump then now to number 3. Once again, another road infrastructure project, not a huge impact. We come down to dam essential works, not necessarily a large impact. Bunnings at $56 million. Yes, it does improve lifestyle factors of the area. It does, I guess, provide those local services, and then people move into the area can go, well, hang on, yes, it does have those essential services. I can see myself living there. And it does impact the thought process of people choosing to go, are we going to move to Bundaberg or somewhere else? It might not sound like much, but we have seen that have that impact in the past. Bunnings, for some people, does demonstrate that it has that level of core service that they need to even entertain the thought of moving there. So that's a project, of interest. In all, we have per capita project spend of $1,000. We add all of those up, we divide it by the number of people living in the area, we get $1,000 per person. On a national level, that is very low, okay? Very low. If you compare it to somewhere like Toowoomba, another regional centre in Queensland, we have over $20,000 per capita spending. For this, Bundaberg, very low. We would like to see this renew. Some nice tourism or agriculture or energy projects coming on the horizon would be very positive, or improvements to healthcare would be very positive. Would like to see that increase into the future. So this is, once again, employment is a current question mark. New projects is nothing really to write home about. It is causing an asterisk for me into the midterm in Bundaberg market. I want to see some more, fundamental analysis or positive signs there from that perspective. I'm not seeing it so far. All right, we've got population growth, very low forecasted population growth and previous population growth. We're at 0.5% here. Nationally, that is very low. Does that mean we have pented up demand into the area with a lack of new projects and high unemployment? Probably not. And we'll probably see in a moment if that's evidenced in the deeper dive. So once again, it hasn't really been at the fundamental analysis stage. It hasn't been a very strong story in Bundaberg, but it is having it is being pulled up with a lot of the regions surrounding it and what's going on that wider coast. So let's have a look at the on-market activity and see if the story is contradictory. Days on market, very tight. I've spoken of this before. It is hard for days on market to get much less than 20. 30 is still extremely tight. We are seeing low stock volumes across the country. So, more broadly, days on market is very low across the country. We used to have a loose rule that anything under sort of 70 to 90 days on market was a pretty efficient market. Now you would say the lower end of the spectrum will be 20 to 30. It's just been a factor of COVID, and we've gone from 300,000 listings at any one time down to 175,000, I think today is the latest number. So you've seen an almost halving in the number of available properties for purchase nationwide. So that does mean one of the outputs of that is days on market is lower. And this is obviously low, but it is quite broadly low across the country. So once again, a tight market here. Very high competition going into Christmas and early this year. It did drop off in February. We have seen that in a number of markets. Okay, we do know, if we look at the macro indications, we've seen investor loans at the highest amount of all time in February. So there is a lot of investor, focus in an activity in the industry. But once again, a drop in the competition levels in February. What does this mean? In simple terms, this is a measure of how many properties are selling within the first week of listing. That really does mean a lot of people have to get their ducks in a row to be able to buy, ready to go. It just means that people have been able to take their time and maybe into the second week of a listing or the third week before they make a decision. It's not necessarily an indication of prices slowing down. It is just the mentality of people decreasing or slowing down slightly. But we have come off an extremely hot month in January, where 25% of properties were selling in the first week, which is extreme on a national level. So we are making up for that somewhat in February. The heat, that mentality has shifted. And it could just be in reaction to the extreme highs in January. So that, for me, it's not a primary signal that I look at. Let's just leave that one there. And I won't really take too much away from that one. Asking prices, we have seen a shift in this market from $350 to $450 in 12 months. Okay, so it's obviously moved. This is asking price, not sale price. The market has moved. There has been a horse that's definitely bolted here. We're talking 30% increases in asking prices. We've seen the market expand, so the top end's moving as well, and the whole market is shifting up with it. So that is a very healthy sign. And that is continuing to really run away. There is a top end of this market. People are willing to pay at the top end, and that's a key point. Stock inventory, very low, extremely low when you consider the number of dwellings in this local government area, and it has been trending down. Houses have stabilised somewhat in the last few months, but you can see this trend line. We're almost at the point where we've lost half of the market as an option to purchase. This is causing this snake, this constriction, this binding of the market. And this is now the output of those things. Days of remaining supply. We're at basically rock bottom. There's not many markets in the country that I've seen less than 100 days of supply. We're at that level now. And this is causing an extreme amount of tightness and pressure in the market. This is evident. So this is one of the outputs. When we see that days of supply so low, we start seeing these strong upswings in discounting. So how are properties selling in comparison to their asking price? We're now in positive territory. We've already gained 3% in recent times. This is showing that we're on the upswing of a market. It's obviously, we've seen that through the price growth. When you start heading up towards 2 or 3 or 4% above asking price consistently, that's when you start seeing a top emerge. So this signal would show to us that we might still have some steam left in the market. Rental analysis. Days on rental market, an extremely tight rental market. Okay? This is extreme and it's still trending downwards. This is showing the rent side of a market generally leads the buy side, and we are still seeing continued tightening in this rental side of the market. This is once again a very bullish signal. Rental listings, this is confirming it. We've got a low rental market. This is a whole city we're talking about with less than 100 properties available for purchase. It's been dipping down here towards 50, but once again, we're now on the lower side of the ongoing median. The number of houses available for rent across this whole region is, 30 to 40. That's extreme tightness in the rental market. What are we seeing? Well, people are still pushing. This was not $10 jumps. These are $25 jumps in rent month to month. Okay, we're seeing $10 increases here, all the way through. This is extremely fast and rapid expansion in the rental market and how much people are willing to pay to rent in this market. We can see the gap has widened. So once again, the top end of this is really leading the market forth. So we are seeing people are willing to pay more than $500 a week to live in Bundaberg. That's a very bullish sign. It's dragging the buy side up with it. Yields are holding. So whilst we've had 30% price growth in the last 12 months, we've also seen that rapid expansion in rent per week. Yields are holding. 6% rental yield across the city. So let's sum this up. I have had some feedback around, well, what is the actual conclusion from our Cairns video? Okay, and I have responded to that comment. What is the conclusion here with Bundaberg? The macro, the fundamental analysis, it's okay, but it's not necessarily the strongest LGA on a national level. There are other better areas. That's the mid to the longer term. I would like to see tourism really sort of starting to fire up in that region again and some larger projects coming back through the pipeline. But all in all, we can't argue with the on-market activity. The rental side of this market is really driving things forth, and it's showing us, especially with these types of yields, we've potentially got some room to continue growing, even with the high growth. You know, so as a short-term buy and hold for the next 12 to 24 months, it is looking like this market still has some room to move. I would like to see employment and new projects come to the party to confirm, but we don't necessarily have to buy a share in the whole of the Bundaberg region. We can buy one property in one street in one suburb. And we are actively involved in 2 suburbs across the Bundaberg city where we can control the local dialogue, right? We are seeing these markets gentrify on a national level, and we're starting to see real shifts in this city as a region for the suburbs that are leading the path forward. We're always going to have laggards. We're always going to see suburbs that are leading a path forward. And that gives us longer term stability. So we can have our cake and eat it too in these markets sometimes. When we're not buying the whole city, we're buying in very strategic locations. They are giving us the evidence to see the short term uplift, but then it is a backbone of this city that provides us the longer term shift. And that's when the technical analysis comes down. It's stuff that we would see at a suburb level. This type of analysis is at a local government area level. When you dive into the suburb and the street, you can see those localised factors. So whilst Bundaberg, it still has some steam left potentially in the tank. Macro, I would like to see some stronger signals, but we can control the dialogue. We can dive in here and buy in individual suburbs where we are seeing some good opportunities at current. Hopefully that helps. If you like what you're seeing, please share the video with friends and family, like the video, and then subscribe to our channel. It would be much appreciated, and make sure to hit the bell icon so you are notified of any new videos as they come. Thank you.